Hey guys, welcome back. In today's video, we are talking about how Citadel is in trouble, over $100 billion shorted, the short charges, and many more in this video. Firstly, we're taking a look at this. We all know why they won't demand trade settlement be enforced. But we're taking a look at this article saying Citadel Securities warns SEC that private rooms 24-hour trading are emerging risks. This is something that we've seen Citadel talk about in the past, not in particular in this subject. I'm talking more about how Citadel has given their opinion on a certain subject, but it's because they are afraid of what it brings. When we saw, again, going back 6-7 months ago, when we were seeing how the CAT system was supposed to be implemented, Citadel was one of the many firms and was one of the loudest ones to actually talk about how the CAT system wasn't good, how they talked about how it infiltrated the private security of retail investors, how it doesn't actually bring the transparency, etc, etc. Now fast forward to where we are now with the CAT system, and you can see it with some of our videos as well, where we covered what the CAT system has shown. We know why institutions didn't want the CAT system, because the CAT system has already exposed them of so many things. We've seen how many trading errors there has been. We've seen how many option hiddens there have been, and that's why they are vocal against it. And now we're seeing them do the very same thing. Bear in mind, Citadel have themselves in a very bad position recently. We obviously talked about they having to close over leverage positions. We talked about how they were in the loss in both February and March, and we've yet to obviously see the April result. And so this is why we know that they won't demand trade settlement be enforced, because they are obviously afraid of what's going on. We've also talked about how the collaterals have obviously been dropping recently. We talked about, multiple different aspects, and these are all lining up to one thing. And now on the other hand, whereas we're seeing these shorts struggling, when we take a look at AMC, you can see this. Picked up another 4K AMC shares. Movies say it looks great from Q2 and on. AMC is not like to have dilute further to manage cash burn, and by SI is increasing by a staggering 10 million shares every 2 weeks. In spite of share price being close to all-time low, we will win. So let's take a look at this quickly. Now, firstly, again, we're talking about how investors, how apes are seeing this as an opportunity. And you can see it, quite frankly, from today's price action, when we are obviously seeing everyone buying it up when AMC went down. Again, these price movements right now, it looks like it's just being algorithmically coded, where we're looking at AMC sometimes close on 0%. It was plus 0.37 and now it's minus 0.37. One can only ask what's going on there. But it's also to know that right now, despite AMC at such a low price, despite how shorts have claimed that they're out of AMC, that they're not shorting AMC anymore, we're still seeing the short interest go up. And this is on a company that has shown that they are extremely undervalued, that has shown that their fundamentals deserves more higher price. Why are they still trying to short AMC? And obviously in yesterday's video, we talked about how the swap positions still exist, and it's because they are obviously trapped in this. I'm sure everyone knows. You can also see, and again, I wanted to show multiple examples because I don't want to just show one particular person. There are plenty of people who are buying AMC. I'm just showing some of the bigger ones to let you guys understand what's going on. I show small positions, I show big positions. It's just for everyone to have an understanding of, what the investor sentiment is like. We can see AMC after this morning, I upped everything. I now have 41,000 shares and control over 108,000 shares with options and shares combined. Now, this is obviously one of the bigger investors within the industry. Now, he's obviously being very impressive. 108,000 shares as a retail investor is obviously very, very impressive. But it's more about what we've said in the past. With all the retail investors that's in this market, you only need around, depending on what we're looking at, just over 100 shares for every investor in AMCs in terms of retail ownership, for them to have 100 shares, and that will be the float. Now, like we've said, some people may have 100 shares, some people may not have 100 shares, but we know that actually the number could be even lower, because there are individuals out there with over 41,000 shares that they own. And so this is what we talked about with understanding how the float has obviously been brought up multiple times, how we know that we've been dealing with synthetics, and is why these shorts are of course worried. You can also take a look at this. Imagine shorting GME, spending 107 billion over 2 years and still getting buried by a 13% short volume ratio. You'll run out of ammo, you'll run out of time, now you're about to run out of chairs. This chart isn't just bullish, it's a slow death spiral for short TikTok. Now, we've talked about how the short volume ratio, the short interest, has been increasing for both AMC and GME. And this is something that we have obviously been keeping up to date with. And the reason for this is because of the fact that these shorts understand that they can't get out anymore. We've seen how much money they spent over the years. Again, if you guys haven't watched yesterday's video, make sure you do so. We essentially talk about the swaps that have existed since 2021, which doesn't have an expiration date. And it obviously shows that shorts can't get out because if they could, they would have chose to obviously profit those positions already. And so we've known that they've sunk so much money over a completely long amount of time. We know that they're still doing this every single day, yet they fail to do so. So if you want to ask why they are in trouble, well, we talked about at the very start, and we obviously talk about what they're struggling with. And you can also see massive 33 million GME buy orders for 1.2 million shares, and this was previously. Now, the big thing about this, and you can see, is in terms of when they talk about, these private rooms or these 24-hour trading, they don't talk about trade settlement, they don't talk about dark pool. And that's a very important aspect, because that's how we know these institutions don't care about retail. Because if we take a look at this $33 million worth of buy order was in dark pool, was in the dark exchange, meaning this didn't have any effect on the price whatsoever. Someone bought $33 million worth of shares and it doesn't have an effect on the price. It's meaningless. It means that even if someone bought $1,000 within the lit exchange, it would actually have an effect. So you can understand it as someone buying $1,000, of course, $1,000 won't bring up the price that much. But it's the very fact that even by buying $1,000 worth of shares in the lit market will have a bigger effect than $33 million worth of shares being bought because it's rooted in the dark exchange. And that's what the shorts has been doing. That's how they've been manipulating. And it's why we've said that they need to talk about things like this. They need to get rid of things like this in order for us to actually see fairness in the market. You can also see why shorts are shitting their pants right now. May 5th, Andrew Leff, Citron Research, will be hearing for criminal indictments for securities fraud and making false statements to federal investigators. Be sure that short sellers will shit in their pants. And guess who's holding the same earnings the next week? Now, we've talked about this briefly in the past. It's essentially talking about how they were manipulating price in terms of articles. And this is what we've said. Shorts aren't out here, and institutions as a whole isn't out here to help out the retail. They're here to obviously benefit themselves. And these articles that we see, and again, I see people try to use these articles against AMC by saying, well, look, I saw this article that said AMC is going to go bankrupt. Well, understand that short, and this short seller in particular, is facing charges because of the false data that he gives out in order to benefit himself and profit himself. So when you see these articles that are saying that AMC is going to go bankrupt, understand why they're doing so. And bear in mind, these articles about AMC going bankrupt has come out every year now for the past 4-5 years. And every year they've said AMC will be bankrupt in this year. They said that AMC will be bankrupt in 2022. AMC will be bankrupt in 2023. AMC will and you get the whole thing. But AMC is still here. The very fact you can still even argue about AMC is because AMC isn't bankrupt and shorts are trapped. And that's why they're worried. And for those of you who say illegal naked short selling doesn't happen or is a conspiracy, what those in charge say is actually a problem. Where we're taking a look at this, and his US Senator raised concern about SEC oversight of Trump media investment products. Now, it's essentially just talking about naked shorts. But we've seen how, we talked about Paul Atkins and his view on naked shorts. Like I said, we yet to see any actions being taken. For all we know right now, it's just words being spoken. They're just trying to make good images themselves. We don't know what's actually going to happen. But what we know is that naked shorting is a thing. It's something that has been impacting and negatively damaging stocks. And potentially, because of the person in charge right now and his view against naked shorts, we could see actions being taken. But yeah, guys, thanks for watching the video. I'll catch you guys next time.